Well, g'day everyone. Welcome back to Captain and the Coach in episode number 10, which is focused on where will the industry be in 5 years. The person to my left on the screen, which I should be pointing this way, is Trav, the Captain Carruthers. I, of course, am James, the Coach McCracken. And this is an interesting topic. Trav, this was your topic that you wanted to discuss. Is it doomsday for the broking channel in 5 years' time? By the way, I just thought I'd sort of start with that comment to make this a little bit, more animated. But what's your view or perspective on where do you see the industry potentially evolving or progressing to over a period of time?
Yeah, well, I'm really excited about where we're currently positioned and what I see for the next 5 years. I think there's a lot of disruption coming, but with disruption comes opportunity. So, in the business owners and people like yourself that I'm speaking with the industry, I think there's some changes coming, and I think there's people that prepare well for it are going to see a lot of success in their business. And I think there's going to be a bit of a shift around aggregation, around M&A. So for those of you at home, mergers and acquisitions, it seems to be a flavor of the month of late. Technology, there's a whole range of different things that are coming, and
Yep.
those that are on the front foot with this, in front of center, I think they're going to see some growth in their business.
I wonder whether one of the things that might happen in the next 5 years, and I would go so far as to say established brokers would probably welcome this as soon as possible, is higher barriers to entry for the industry because clearly you can be doing any vocation one day and providing a client some suggestions around how they structured their home loan the next. And I'm pretty sure the last time I looked and was down getting some advice in terms of my back, that the person didn't just set up shop the day before as a quack and say that he had a specialization in rheumatology, but they actually spent 6 years as an undergrad in medical and then another 4 or 5 years in doing their specialization in addition to whatever else they did to get themselves to a level of competency. Now, we know, of course, most people aren't going to spend 11 years in terms of their education to become a broker, but I think we could all argue that we would want to have better levels of setting the industry and those people up for success, and also ensure that there's consistency of the quality of information and advice that's provided, because I'd go so far as to say, in some cases, it isn't. And I know that might ruffle a few feathers, but I think deep down, a lot of brokers harbour the same view. It's just that it's not necessarily mentioned or discussed. Um, but I also know brokers that have said, I've spent half my career undoing other brokers' mistakes, and I would categorically believe that to be the case because sometimes writing alone and doing a good job for the client aren't necessarily the same thing. So that might be a topic or an area that progresses as the industry matures and becomes more professional.
Yeah, well, we see extremely low barriers of entry, but then extremely high barriers to success. Fact check me on this. This is just information. I haven't checked this, but from what I've been told, by year one, like what the attrition rate is 50%.
I
And
don't
then
know.
but
I've heard some of these numbers, but I think that they're just convenient numbers that people sort of
hmm.
roll out. I don't know if there's any substance behind them.
Yeah, but again, but yeah, so we'd have to fact check this, but there's a lot of brokers that are writing, what is it, 20% of the industry is probably writing 80% of the volume. And I would tend to believe that particular metric. So yeah, you're right. It's barriers to entries are extremely low, and barriers to success are extremely high. Like you look at me, for example, I'm probably an outlier with this. Very no banking experience. I had 15 years in the police. I become a broker, did my Cert 4. Uh, I joke saying I didn't know the difference between LMI and LVR, and it probably wasn't much better than that. I'm one of the outliers. It's been a success story, but for me, there's probably 50 other brokers that have tried to do what I've done and been unsuccessful and are no longer in the industry. So yeah,
Possibly.
I agree.
Yep. I'm just looking as we're talking, see if I could bring up a document that talks a little bit about broker performance. One of the ones that I occasionally refer to is the MFAA's Industry Intelligence Report that gives some
Hmm.
level of context around the performance of brokers, the percentage of brokers that are at different categories of settlement volumes in a six
Hmm.
month period, which in the main hasn't changed a great deal over about an 8 year period. I know that there's been conversations as to the percentage of individual brokers that's become far less because of a lot more groups appearing of two or more brokers, but the data doesn't necessarily suggest that's the case. I think that might be because most of the individuals who come in to the industry are exactly that. They're individuals. And whilst more mature firms might be progressing and evolving in terms of two or more within an organization, there's still a disproportionately high number of individuals that at this point in time hasn't changed greatly over a period of 7 or 8 years. So, so mergers and acquisitions is likely to continue over a period of time, again, under the guise of professionalization of the industry. We know that well, I think there's a sentiment or an undertone that many people would like to see greater levels of proficiency and capability for brokers to undertake, similar to an apprenticeship in a trades-based environment where, again, you need to undertake certain levels of competency and proficiency before you start, running the show. In addition to that, what else? Let's talk about tech. Do you see much evolving? I mean, surely tech's, run its race, right? That's not going to evolve from here.
Yeah, well, you see people on the forums all the time talking about how AI is going to take their jobs. I couldn't agree with them more. If you think AI is going to take your job, it probably is going to. It's not going to take my job, right? So 10 years ago, I don't want to sound disrespectful, but I was probably as I was entering the industry, like we were glorified loan processors. People would come to us looking for a home loan, we would get them a home loan.
You
Now
mean
we're
you? I'm not sure that others would find that's the case.
maybe look, I'm not talking about the top performers. I'm talking about the industry, like that they're like it was. I think we've evolved as an industry where we are now trusted professionals. We're providing advice around strategy and structures a lot more now. It's becoming more the norm now than what it was 10 years ago. Like I'm talking about my own experiences with brokers I dealt with. I'd go to them for a home loan. We weren't having discussions around offset accounts, around loan structuring, around those sorts of things, right? Where now I'm finding the brokers I'm talking to, it's pretty common to put together a strategy report, to do an education piece with the client. It's becoming more standardized, which I think is a good thing for the industry. And I think the people that get this advice piece right, that become the trusted advisor for their clients, as much as AI is going to enhance their experience and bring in some efficiencies, the client at the end of the day, they want to trust. They want to be able to get on the phone to Trav because Trav understands my strategy. Trav understands my pain points. I can speak to a person. I'm not waiting for a chatbot to answer my questions.
By the way, just because I can, I'm going to object just slightly to what you've said. I know categorically that there were people in the industry that were doing the whole strategy thing 10 years ago. I think it might have been that your experience and the people that you were speaking to didn't necessarily fit that profile back then, and therefore that sort of formed your experience and your view of the industry, but it doesn't necessarily reflect the actual industry itself. So.
Yeah, obviously there were top performers 10 years ago, right? But I
But
guess
not
and they
even necessarily top performers. I mean, sometimes the top performers aren't necessarily the ones that are doing the best advice for clients because they're a little bit more like the McDonald's version of banging out hotcakes. And to quote another person that is a reasonably high performer, he's and I've sort of loosely quoted him as the millionaire maker, is that again, his quote, not mine, is, James, I'm more like Vue de Monde than McDonald's. And Vue de Monde, for everyone that doesn't know, is one of the most expensive dining venues in Melbourne, where you get a very personalized experience, contextual to your budget and your palate and so forth. Whereas obviously McDonald's is not exactly that. So anyway, I know I've just ruffled a few feathers by saying that not all high performers are necessarily the ones producing the best value for clients, but I think that there's probably some level of sentiment around that as well.
yeah, I think well, I guess what the point that I was trying to make is it's not an industry as a whole, but I think that there has been a big push to increase that value proposition with our clients. Like I think it's becoming more mainstream than what it once was.
Yeah.
So what you're finding, yeah, and this brings in that education piece and those barriers to entry. I mean, we want people extremely proficient in our industry that are able to put these strategies together and are able to articulate them to their clients. So Yeah, I guess that's probably just to my point around the shift that I've seen in the industry in the last decade.
Yeah, and I think that will continue to be the case. That people are, well, I do think that that 10 years ago or thereabouts, when the industry was just about to crack 50%, is that broking was certainly an option and a viable option that people would take into account, but clearly not the only or preferred option, because there was still more than 50% that were going direct to their existing or a different lender. Whereas these days, when it's mid 70s, then it's clearly the preferred channel, and that in and of itself speaks volumes. And I think by extension is some of the maturity of how the industry educates the brokers to be, in some cases, more solution oriented as opposed to transactional, will contribute towards the values that consumers receive from them as well.
Yeah, well, that's you make a good point there. So when you talk about the our market share, so as I said, mid 60s, I think of last time I was like 76%, I think was the number that was quoted.
Yep.
So this is probably a point I want to make here is like we see it on the forums and stuff where brokers love to bash the banks and banks love to bash the brokers, and it's just been like that forever and a day. But they're saying that we don't compete. Like one in like three in four loans are written by brokers now. So by that rationale, we are competing against one another. So like this is where improving your value proposition, branding, marketing, all those things, right? Like why am I doing this? Because I want to. I mean, I want to compete. So it's so people, these brokers that are turning around like that want to sit around a campfire, hold hands with the other brokers and sing Kumbaya, like that's great, but I'm sorry, like they're your competition. I'm not saying don't like I share IP with other brokers all the time. Some of them that reasonably close to me, right? Like in the local market. So yeah, we
Yep.
are competition, but like it is what it is, right? This is where the market shifted to. We are competing with other brokers.
This is true. The same person that's the millionaire maker I referred to earlier, Mr. Voudemond, if you want to call him that. Uh, he also has an immense mindset of abundance. And whilst today's episode is not going to be about the mindset of abundance, I explicitly said to him on an episode where he was a guest on one of our group-based coaching sessions, I said, are you aware of the fact that you have a mindset of abundance? Which, for anyone who's out there that's wondering, what does that mean? An easy way to say it is consistently looking at things glass half full and through an opportunistic lens. So he would say, I welcome the opportunity for there to be competition because there's always enough business out there for all of us. And if we do a really great job, then we'll see that being reflected in terms of how our business continue to evolve and grow. And I personally, I think that's a really mature, sustainable, and viable way to think, and hence why he was sharing a bunch of knowledge and insights on that session, because he wasn't particularly concerned if anyone did run with it, because he'll always have enough business out there to serve and support him. Which, incidentally, over a 7 or 8 year period that I've known him, the problem he's consistently had and still has is too many leads. Not a word of a lie. It's a problem he's consistently having, is not having enough team to deal with the quantity of inquiry that comes in. But yeah, and I think it's strongly reflected through how he sees the world, which
Yeah.
is to his credit.
Yeah, I couldn't agree more. Competition is a great thing. Like it's challenging us. We're evolving our systems, our processes, our client experience,
Yeah.
our value proposition, all these things. We're trying to shift the needle. And what we're finding is as brokers, the more we do this, the more professional we become. And out in the marketplace with our clients, like we are seen differently. It's like gone are the days where like we've worked really hard on our client experience where it's funny, like I have clients of mine that they have a planner, they have an accountant, they have a buyer's agent, and they're still coming to me asking me questions. And like I'm asking me questions around accountant, like it might be tax strategies or stuff like that. And I'm like, look, I'm not your tax professional. If I was you, I would go and get clarity around these. I'll give you the questions that you need to go answer. I'm not going to answer them for you because I'm not a
Yep.
tax professional. But if I was in your position, these are the questions I'd go speak to my accountant and I would get clarity around. And it's funny how some of them come back to me and go, Trav, my accountant doesn't know what it couldn't answer the questions. And I'm like, maybe you need a new accountant. Like I'm not going to provide I'm here to secure your finance and put a strategy together around finance. You
Yep.
need an accountant that you can trust that can provide you advice, right? Like I'm not, but it just proves my point that we were able to provide so much value and we're so proficient and professional at what we do that we've built that trust with our clients that they think we're their go-to for everything, which I'm happy. I'm not going to be their go-to for everything, but it provides me with comfort knowing that we are doing something right.
I think it's really valuable to build that equity in the mindset of the consumer that they can feel that confidence to come to you for a host of different questions because they know you can channel them or direct them in the right way. You may not necessarily have the answer, and I would imagine they don't expect you to have the answer, but they expect that you'll know how they can go and seek the answer. And I
Hmm.
would go so far as to say when you've built that perception in the eye of your consumer, that's worth its weight in gold.
Yeah, no, definitely.
So, in addition to this, what else? Where else do you see being some changes or maturity or growth or otherwise with the industry over the next 5 or so years?
I think we're going to see, look, the days of the one man or one woman band is, look, I think they're numbered. When I was transitioning, so maybe 8 years ago now, there was a big push about part-timers. We don't
Yep.
want part-timers in the industry. We're pushing for full-timers. We're trying to increase that professionalism. And
Sure.
that was when I was part-time. I transitioned to full-time. And what I think we're going to see is we're going to see that trend continue where what you find is the one man, one woman band with very small team and unable to invest in systems and processes and technology because they don't have the scale
Yep.
that they are going to get left behind to a certain extent to those bigger businesses, those medium to large businesses that have invested in technology, that have got big support teams in place that are very client facing. So you'll hear it a lot, the high tech, high touch. So that's probably what we incorporate in our client experiences where we're on like a 5 minute conversation with a client 3 years ago. It's probably a 20-minute conversation. Lender recommendation phone call, which was 10 minutes a couple of years ago, is now a 45 minutes Teams meeting with a strategy report that we go through page by page. So I can't do that without actually having strong systems and a big support team behind me. If I was a one-man band trying to write the volume I'm right, I don't have time to offer that level of service. So it's one of these things that these one-man bands, I'm not saying they'll be eradicated from the industry in 5 years' time, but I'm saying it's going to be a lot harder to be able to compete as a one-man band. And that's where you find with M&A or these contractor models where they're coming in, the system support branding is all provided for them, and that they're essentially just sub-aggregating, for want of a better word. I don't like that word, but yeah, like it's, I mean, you see some people, I play in that space. This is how we're attracting brokers. There's other businesses doing similar stuff to what we're doing. And I think you're either going to see that or you're going to see, we see investors coming into the industry where they will essentially try and secure a business with great systems and processes, and then they'll start taking positions in other businesses and feeding them into the business with great systems and processes and taking that business from 4 brokers to 20 brokers. So I think we're going to see a lot more of that in the future.
What about upfront and trail? Do you see that those are going to change? Uh,
Look,
or
I
do you think
probably, yeah,
maybe,
this is going to be pretty controversial, right? Like as soon as we start talking about clawbacks, everyone's ears prop up and everyone starts commenting and everyone's got a really strong position on this, right? I took the opposite. I'm like, everybody just be quiet. Like, yes, clawback is not ideal, but banks aren't going to erode their profit margins. They're all publicly listed. They've got shareholders that they need to report to, right? So we've seen it already. Oh yeah, we'll adjust our clawback policy, but we're going to adjust our trial. I'm like, now I'm stuck with lenders that with this new, and everyone's like, oh, this is a massive win. I'm like, this is a loss.
do
Like
you,
I would prefer them not to touch my trial.
do you think that either of those are going to evolve in some semblance? I'm not asking you for the crystal ball around what that is. In other words, in 5 years from now, will nothing have changed as far as upfront trail and clawbacks are concerned? Or do you think that the industry may evolve a little bit to accommodate some of those situations or contextual to the type of clawback?
Yeah, well, I think obviously like our industry did very well at the Royal Commission. So I think we come out of that quite well. So I can't imagine there's going to be
As
another
we
Royal
should have.
Commission.
Yep.
Yeah, there's not another Royal Commission on the horizon, not for the next decade anyway. Or we're talking about 5 years here, right? So I can't imagine any massive changes. But in saying that, yeah, look, I don't know. Like it's a very controversial like trailing commission. It's always been a hot topic, and I think it will always remain a hot topic.
Yep.
I think we've got some. Yeah, I mean, you look at our aggregators, like the big aggregators to the Royal Commission, were very proactive, and I'm really, really happy with the advocacy and support they provided us, FBAA, MFAA. Like, I think we've got the right people in the right places to try and future-proof our industry.
This is a very political answer here, Trav. I'm not sure it's necessarily what I was expecting. So let me ask you this one. What about fee for service? Clearly, it's not going to get mandated. It's something that is becoming a little bit more prevalent. Do you think that that will continue to evolve and grow over a period of time?
Yes. Yes, I think that will grow. I think what you'll find is as we increase our value proposition and as we niche out our little place in the market, that you'll find that these brokers, the more proficient they get, essentially, the more they can charge for their time.
As I said. Yep,
So
I agree. I mean,
yes,
it's already happening, clearly, but I can only imagine that will continue to evolve, not.
we've started to introduce a fee for service for certain applications, and we're getting zero pushback on that at this point.
Yep.
We're looking at building out some technology that'll be accompanied by an increased level of support and an offering to the clients, which will be a fee for service model. Yeah, so it's something that we're focused on here at Virtus, and we'll probably look to do. It's and I personally don't see an issue with it, right? Like if you like put it this way, like if you busted your knee and you turned up to your surgeon's office and mate, he's got a Porsche sitting in his driveway, was that to me would leave, well, mate, he's very good at what he does, and he's obviously remunerated according to his skill set, right? So if I turn up there and he's got a bomby old Commodore, I'm like, oh, I don't know if I trust this guy to be digging around in my knee with knives and scalpels. Like I don't know, it's one of those things.
I think the one who's driving the Commodore is working off Medicare only, and the one who's driving the Porsche is probably charging a little bit on top. So compliance, do you think that will continue to evolve? Surely this has to. And I don't know necessarily in which direction, but this is absolutely not a static segment of how the industry provides service.
Depends which way the wind's blowing, I guess, when we talk about compliance. It seems to be like, I don't know,
And look,
like,
it's a bit of a broad topic in the sense that whilst there's some commonality amongst aggregation, it's not necessarily a consistent theme across the board, and every aggregator will have slight nuances in terms of how they interpret things as well.
yeah, we see it from aggregators. So there's some aggregators in our industry that have got a reputation for being quite lax with compliance, and then
Yep.
we have the other end of the spectrum where they're very stringent about the way that they run their compliance audits, and
Yep.
there's pros and cons to both.
Yeah.
There are certain things that I'd like to see changed. Hem, for example, hem doesn't make any sense to me. I would jokingly say to my clients, like I could have a client that works in the mines that's away for 6 weeks out of 7, and when he comes home, he's loves his World of Warcraft or Minecraft or something, and because he's on $300,000 a year, his hem is $6,000 a month. Then I've got bartender that works in a local nightclub that's got a propensity for cocaine and hookers, and he earns 80 grand and his hand's 2 grand. Like, doesn't make sense. That just doesn't make sense to me. So
I
I
feel
don't know
like
whether.
asking some clarifying questions there, but I might just let that one go through as a keeper.
Look, that's no, that's not one of my clients. I haven't, that's not that's me just trying to go to extreme ends, right? Like the mining client, yes, I have. The coke fiend bartender, no, that's not one of my clients.
I'm
That's
just
just
imagining
me.
the other topic of this episode: cocaine, hookers, and with Trav and James.
Yes,
Okay,
no.
let's try and sort of tone this down a little bit because, you know, I've got a reputation to uphold here, buddy. All right, so we've talked a little bit about tech. I think without you explicitly saying this, one of the reasons for us looking at this topic was, I think, the undertone that uh, uh, will technology take our jobs? I think that's where you were or is that right that you're maybe intimating, suggesting, or at least opening the conversation up around the possibility of that being the case, as opposed to is the broking industry stable uh, and resilient and well positioned to continue being the channel of choice in 5 years?
Yes, yes, I think we definitely. I think we're in a really, really strong position as an industry, and we've got some very, very smart people that are investing heavily in technology to further future-proof the industry. So we're seeing like Quickly is a great example. There's some AI platforms that are currently being built out. There's CRM platforms. There's a range of technology which is allowing us brokers to be more proficient, reduce our cost base, improve our client experience. There's a lot of yeah. I don't think, as I said, like I sort of jokingly say, if you think AI is going to take your job, it will. There is very few people in the industry that I think is that's going to apply to.
Yeah.
It's just a bit of a polarizing comment, but yeah, I think what you'll find is through the innovation of technology and the integration that we will see over the next 5 years, it will. I think it's just going to position our industry as a whole in a stronger position, we will continue to be we will continue to maintain our market share. I would think. I think banks are going to push back. I think we're going to see some pushback from the banks in the coming years. Mate, what were they, 50% not that long ago? Now they're at 25. So I can't imagine they're happy with that. So but yeah, I think that back to the tech piece. I think that I'm pretty confident where we are at the moment and where we're heading.
My opinion is I don't think the banks will push back. I think that they've made concerted efforts to do that over a strong period of time, and I think the lenders that are best positioned to to engage and connect with the brokers are those who are already choosing to do that right now. So when you see some of the marketing that goes online where they'll say, contact us through this website or through your broker, when they explicitly choose to mention or your broker, I reckon are the ones that, as long as their product is competitive, their pricing is competitive, and their policies are reasonably workable, I would think that the brokers are probably going to embrace those lenders a little bit more favorably than the ones that maybe try and ostracize the channel. Now, I think there's exceptions to everything because I also know that if you look at some of the volumes that lenders right at the moment, their pricing drops is brokers will flock to them, and the moment that their pricing increases, brokers will be less enthusiastic about them. So I think whether we like it or not, rate does play a role to some degree in terms of the volumes that lenders are able to write. But I do think that the brokers that are more inclusive and embracing of the third party channels are likely to be the ones who will continue to earn the volumes from the brokers in the years to come.
Yeah, look, back to the point around the lenders. Like we've seen one particular lender springs to mind here, invested heavily in technology systems and like their process was amazing.
Yes.
The SLAs are unbelievable.
That's these days, right? Whereas they were a dog's breakfast going back 6 to 8 years ago.
Yeah, yeah. And
Right.
yeah, 100%, 100%. And they've shifted and a lot of our brokers turn around and say, oh yeah, but Trav, 10 years ago they were
Or
this.
10
And I'm
years
like,
ago. Yeah.
mate, I don't care if they were that 10 minutes ago. I care about what they are right now.
Hmm.
So like, and we've gone to them and we've had a lot of success with this particular lender over a sustained period of time now. And if they, whatever reason, if they were to exit the market for want of a better word, you know what I mean? If something was to change, like we would just, we're lucky enough that we got 60 other lenders to work with, right? And then we've got other
Correct.
lenders that have been less supportive of the broker channel. And we've seen their numbers from broker introduced loans decrease significantly, right? And there's lenders out there that are actively targeting real estate agents, accountants, offering like point 0.3, point 0.4 for a referral fee upfront and trail. Like how
Yeah.
us brokers can't compete with that. So yeah, so like that's where I think we'll see a bit of pushback. We'll see a bit of pushback around I've heard some horror stories. I can't fact, but like where there's been scenarios that have been introduced bank direct, where they've been approved, where there was there obviously there's different compliance
Oh, yes.
requirements,
Yeah.
yeah, and those sorts of things, right? So whether the bank has
One
a
policy for all rather
yeah,
than different policies for us
yeah,
versus you.
yeah, 100%. So that's where I could see the banks pushing back, where they've got policy or pricing that's bank direct that's not available to the broker channel. That's an area where they can compete quite easily with us.
Yeah.
So yeah, so I don't know that I would like to think that we can find some sort of happy understanding with the lenders. You know what I mean? Like there's certain lenders that obviously have issue with where we sit with our market share, but
The one thing we didn't touch on is the potential for loans to be approved over a period of time within seconds or minutes rather than days or longer. So I think it's almost categoric that we are going to get to a point of loans. I mean, we're almost there with certain lenders as you speak. As you say, like, the fact that they can provide unconditional approvals within hours. And so
we
surely
had
that's
I had
going
one
to
last
improve.
I had one last year, submission to formal in 24 minutes. And it was that lender that we were just previously talking about that we won't mention. But
Right.
that's submission to
I'm,
formal in 20, yeah.
well, I'm not sure that we can get much better than that.
That's like that. I mean, like that's like that is that's unbelievable. Like, don't get me wrong, a lot has gone into submission quality, like that. Obviously, one touch file, right? But without, I mean, and this is where I think banks need to up their game. Like you see these banks going pre-credit assessment, this they've got all these steps. Oh, your loan's approved, but now when you say like, why are you creating all these steps? Like, simplify it, mate. Like, and you hear
Is this where
people.
you're escalating that file if it doesn't get approved within half an hour? Surely you'd have to be on the phone and escalating to the credit manager
Yeah, but
or
it's
the
funny
BDM. Mate, I've
that
been waiting
particular
30 minutes and my
uh,
client's, impatient.
uh, that particular lender doesn't have a tiered service for brokers. So we see this in the industry now. You see like tiered services with different banks. Oh, I'm gold or elite or platinum or whatever
Yeah.
you want to call it, right, with each lender.
Oh, they don't. I was unaware of that.
Yeah, yeah. So this particular lender doesn't. I actually was lucky. I was sitting down having lunch with my BDM and the state manager, and they said, "What do you want from me? What do you need from us?" I said, "Keep doing what you're doing."
Yeah.
I said, I'm not a lead. I'm not platinum. I don't do it. I very rarely, I can't even remember last time I asked for an escalation with that particular lender. Things just get done.
Yeah.
So if we were, if banks are listening to this, if they can start taking on that model, this is where I think we can improve our client experience. And this
Hmm.
is where like we can shift to more like I would love to see, I would love to see our industry working on equipment finance timelines. I don't think it's possible, but if we can get some key takeaways from what the equipment finance guys are doing, because they're very, very quick and very proficient at what they do. I think that the technology is going to enhance. And as I said, like I know NAB's doing some stuff around this space.
What about
Yeah, just
open banking? Like if consumers have some of their data available on open banking, does that mean that that would also allow you to be able to get the information you need quicker to then assess their situation rather than how it is right now, where they need to manually go and provide you these items?
yeah, definitely. So probably can't talk too much about this, but I'm working on a project at the moment
Ooh, here we go.
uh, that will incorporate this. So yes, look, I think there's going to and there's already some companies, there's already some really successful businesses around the country that have invested heavily. I know some companies that have invested like north of $5 million in technology projects. So that's what I'm saying, that this one man band, because how do you compete with
Yeah.
these businesses that have got these unbelievable technology offerings for their clients? And
Yeah. Imagine that on the front page of your website from inquiry to formal approval in 30 minutes or less. For
yeah,
example, like that's, you would think that that company's going to get a phone call.
yeah, definitely. Obviously, there's some you need to put some strategy. Like it's yeah. Like that's quite a vanilla deal, but yeah, but yeah, I agree. I agree. If we can improve in that space, but the issue that I see here is we're so heavily reliant on the lenders with that, and
Hmm.
the lenders are turning around saying like I've had conversations with BDMs, Trav, can you bring us these deals? I'm like, no, 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 I take those deals to this particular lender,
Yeah.
and they're like, oh, but we're that lender's alternative, and I'm like, I don't need an alternative. I have them. And they're like, well, what do we need to do to get your business? I'm like, easy, do what they do. If you can do what they can do, I'll give you. I'm not. I'm not sitting there running. I don't. Well, obviously, we've got to spread it where we spread our business across, right? But for those particular deals, I'm like, you can't compete.
Yep.
So it's like us brokers with technology. The better our technology gets, the better our client experience gets, the better we can compete in the marketplace, and that's what's going to happen with lenders as well. The lenders that invest in technology, which we see seeing lenders do it to different extents and to different levels of success, but the ones that see the success, I think, are the ones that they're going to get the lion's share of the business.
So with that in mind, I hope that's been an insightful, productive, and potentially in some cases aggravating uh, session today, Jove, because I think you might have ruffled a few feathers with what you said earlier, and potentially I did too with some of my comments as well. So having said that, we're not here to necessarily please everyone all of the time, but we are here to hopefully provide some interesting and engaging dialogue that can help people to reapproach or consider what they can do to optimize and enhance their own delivery relative to their business, their goals, and what matters most to them as people, let alone as business owners. So with that in mind, mate, I appreciate us having the chance to go through this today, and we'll be back again for episode number 11 and continue the conversation with everyone.
Thanks, guys.